Now let's begin with the Zimbabwe Stock Exchange. Once touted as the best performing bourse in Africa, the stock exchange seems to have lost much of its luster, particularly in the latter part of last year. The number of listed companies is now down to just 67, that's from 83, and volumes of trade remain subdued as the economy stutters. Ramah Nyang explores what 2014 has in store for the stock market, which is usually used as a barometer for the rest of the economy.
It's been a slow start to the year, but not cause for concern. Many fund managers still getting out of the blocks after the holiday. What has the ZSE worried, though, is the continued economic slowdown and developments further afield.
There was what's called quantitative easing last year. You find that maybe this year that might not exist, so companies or companies and institutions outside Zimbabwe might not be as freely available in terms of cash to invest in markets like ourselves. So you might find that maybe the foreign investor will reduce in terms of what they are doing.
Offshore investors drove trading in 2013, accounting for 61% of activity. The big attraction?
We're the only stock exchange in Africa which is dollarized. We trade in dollars. So the risk to any foreign investor is lower than in most countries.
But that blessing has also been a curse. Since dollarization, most counters have been undervalued, their share prices well below the value of their assets. This is down to limited domestic demand from ordinary Zimbabweans who have little disposable income, while institutional investors have favored longer-term money markets. That's not the end of the troubles. In 2013, 12 companies were delisted. 6 of them voluntarily, the other 6 forced to after failing to meet listing requirements. There could be more casualties.
The cost of maintaining a listing, you have to keep a share register, you have to pay transfer secretaries. It's expensive for most companies, for the small cap counters.
At least 2 listings have been mooted this year. The government plans to compel all mining companies trading on international bourses to list locally. But with at least 51% of equity already taken up under indigenization laws, there would be limited shares to float. It's still early days, but 2014 looks like it could be another difficult one for the local bourse. There are 5 counters that are currently suspended, and they could all be potential delistings. Plus, the liquidity challenges that affected the economy for the better part of last year still persist. But the Zimbabwe Stock Exchange is one of the oldest on the continent and has weathered its fair share of storms before. The authorities here already see a silver lining in the hovering dark clouds.
We are going to be automating. So we expect that automation will actually more than double the turnover. So that element could counter the economy in terms of what's happening in the economy. And hopefully there will be a net positive element.
Ramah Nyang, CCTV, Harare, Zimbabwe.
Right, so let's have a look at those numbers from the 4 major bourses that we track for you here. The Nigeria All-Share Index so far trading in the red with almost 0.5%. The JSE All-Share Index in the green, 0.02%. The Nairobi Securities Exchange down by slightly over 1%. And the EGX, as is the case every Friday, closed for prayers.